hear your expert opinion. Maybe don't put too much.
No expert, not expert. I just happen to spend a little bit more time than normal people that are busy with their jobs. But yeah, that's just getting a disclaimer out.
Chi Keng even has a very nice backdrop, as you can see over there.
Need to do a product placement so that Alibaba can sponsor me as well.
We should start definitely with Alibaba, and as you have covered on your channel also, Alibaba has been in the headlines simply because of this news that they're going to break down into the sub-segments, and this has actually caused the share price to rally like 14% on the day itself. I would guess many folks are suspecting whether it's Jack Ma, because some news have mentioned Jack Ma is the one that orchestrated this whole breakdown. But the rumor is definitely CCP is involved. What's your take?
This whole breaking up thing, it has been, I mean, this idea of, or this rumor has been floating around for quite some time because of this idea of a conglomerate discount. So essentially, it's just that for many of your big tech firms, they experience some sort of the similar challenges where they have a lot of business arms, they have so many new enterprising projects, and investors in the market just don't know how to value them. So if you actually break up the businesses, I think largely speaking, you allow for market efficiency to kind of price individual businesses. So if your cloud, you have your e-commerce, you have your stuff like that. I think to circle back to answer the question, truth be told, nobody knows who orchestrated this whole thing. And if you look at that article that was published, I think was on Wall Street Journal, it's according to people familiar with the matter. So for a long time, Chinese equities investor, you know that people familiar with the matter, that's the 5 most dangerous word, because you usually just pump or maybe dump a particular stock or basket of stocks because some random reporter got access to some random news. So I think I'll be quite cautious to really attribute it to Jack Ma. But really, at the end of the day, who orchestrated this whole thing, whether is it the CCP, whether is it Jack Ma, or even was it Daniel Zhang, nobody knows, but I think that's not really very important. I think the more important factor moving forward is what's going to happen to the shareholders of Alibaba and how is it going to affect the share price movement, and whether is the business going to be better if post this entire breakdown.
So what I hear from you is conglomerate discount is the motivating factor, but conglomerates have always been around, right? And there are also benefits to being in a conglomerate also.
Right. So I think there are definitely benefits when you keep it in an entire enterprise, because individual companies or individual enterprises in that big umbrella get to work together, then they have synergies and stuff like that. But I think in terms of pricing wise, in terms of valuation wise, it's more effective in terms of trying to price the business if you allow for companies to go IPO. So that's just the differentiation there. And I don't know whether that's the main motivation, but I think 3 main school of thoughts. One is the conglomerate discount. Second one is actually just antitrust, which is what CCP wants to break them up. And actually, last but not least, maybe it was a business decision. Meaning from a strategic point of view, they want to allow business units to be more nimbler to adapt. And at least from the short Q&A where Daniel Zhang actually met up with analysts, I think a few days back, that was his explanation. It was a strategic move to kind of break them up, to unlock shareholder value, to allow for businesses to be nimbler. But all these are corporate talks. They are basically a TYS answer, your 10-year series answer. So nobody knows what's the reason, but I guess they do seem quite motivated and they do seem quite committed in terms of trying to break up the business moving forward.
So if I were to put on the head of a critic or trying to come up with some conspiracy that CCP is involved, maybe I'll be thinking that, if we break them up, we can clamp down each individual unit. For example, entertainment. Correct. Right. Then you wouldn't affect the entire conglomerate. Do you think there's some truth to such a conspiracy theory or not?
I would give credits to that sort of argument, because logically speaking, if you look at it on its side, it actually kind of makes sense. But I'd just like to say that if the CCP wants to do something, it doesn't really matter whether you're a conglomerate or individual businesses. They will just clamp down. So it's not really a concern for them because they honestly don't really care. So I wouldn't put too much credit to that part in terms of trying to crack down just one individual component, because they get to do whatever they want. It's a different country. It's a different way of governance.
So for this whole breakup, is there a deadline mentioned in public already?
So actually, Daniel did say, I think in the short Q&A session, he did say that it was something that they kind of planned very, very early on. So you can see in terms of their breakdown of their financial statement, they always do that 6 categories, right? That was just trying to prime investors into knowing that, hey, we have these 6 main business arms. So in terms of why they announced it here, because their financial year ends on the March 31st of every single year. So that's why they announced beforehand, so that in April, all the strategic thinking and everything, it will kick into process. So which is why when now they announced it's timely because they start a new financial year, business units are already separated out. But if you were to ask clearly, like, is there a timeline in terms of which company is going to IPO, which company is going to raise capital and stuff like that? No, there is no obvious timeline. And also in this current climate, it might be a little bit tricky to raise very sky high valuations because I mean markets are slightly depressed and interest rates, inflation, yada yada. So it might not be the best time to IPO, but yeah, there are talks and there are discussions around it now.
So if you were to pull up the segment breakdown, I guess what you're mentioning is China commerce. That's of course Alibaba in China itself.
How about Tmall?
Yes,
yeah,
correct.
right.
Cloud, international commerce. I think that's Lazada. Lazada is bundled inside that component. Right? That's the third.
Alibaba.com.
Cainiao.
Yeah.
Then local consumer services. This is logistics.
Yes. No.
Then
Cainiao is the logistics.
Oh, China is logistics.
Local consumer services is basically your Grab, your food, your travel, your airplane, your hotel, those kind of stuff.
The one that competes with Meituan.
Yes, correct. Competes with Meituan.
Then last but not least, digital media and entertainment. The last one is way too small.
Correct.
So the 6 segments should be digital media and entertainment.
Yes, correct.
So of this whole breakdown, everything looks to be growing other than China commerce, right? Which is the biggest, or what Alibaba is known for.
Correct.
Is this a good reflection of growth within the entire conglomerate?
Largely speaking, because the China commerce business is such a huge business, right? And the entire profitability of the business is reliant on the commerce business. So what they're essentially doing is pretty similar to Amazon. So if you look at Amazon, most of the profits is generated by AWS, and then it's funneled to their commerce business, their advertising business, and stuff like that. So in Alibaba's case, it's the same, but it's just that it's a different business arm that is supporting the rest of the group. But you can see that in terms of growth rate wise, they have largely been discounted. I think because of the whole China issue, most of the companies out there, even if you were to look across competitors, most of them have experienced very low growth. Let's not talk about those high growth companies like Pinduoduo. So you look at Tencent, you look at JD, most of their growth rates have all came down quite substantially. It's kind of affected by macro environment. Hopefully, when the reopening comes, there is greater excitement for consumers to spend. There's confidence coming in again.
But China commerce shouldn't be affected by reopening, right? Correct? Because even in lockdown, it was the primary way people were getting products and goods.
So in terms of the lockdown wise, right, I think it was the consumer sentiments that really hit Alibaba and JD specifically. So both of them, because, okay, so for JD, they do the higher segment. Pinduoduo does the lower segment. Alibaba, they do everything. So they try to do everything. So in this case, I think Alibaba's premium segment and JD's commerce segment has taken a huge hit because of confidence. So which is why you look at or you track Pinduoduo's growth, right? They actually went bananas. It just skyrocketed because everybody was transiting over because the discretionary spending all start slowing down and everybody was just doing essentials and they want to find cheaper goods. They do group buying and stuff like that. So that was just a few nuance in terms of the commerce spending. So now we are just hoping that in terms of the ticket size or in terms of the order size, when people get excited, people anyhow spend again, then numbers get better and there is better recovery from there.
So you believe it will reverse? Pinduoduo's exceptional growth over the COVID period would normalize, whereas Alibaba and JD could recover as luxury spending.
I think normalize is the better word rather than to say reversing. Because in terms of now, it was unprecedented times. So for Singapore, for US, we say that it's unprecedented in 2020, 2021. But for China, they dragged all the way till end of 2022. Then they did a 180 shift. So this unprecedented time might not be very holistic in terms of understanding the entire picture. So that is why I kind of think that we might need to wait a few more quarters out into 2023 before we can get a better understanding of the entire situation thus far.
I want to quiz you about cloud segment also, because cloud is exciting. Sure. Cloud is where Amazon, like you mentioned, is drawing the big monies in. But it seems that growth rate isn't that spectacular also.
Correct. It fell off a cliff. Right. So I think personally, in terms of cloud-wise, right, there is a lot of things to blame. I mean, the management team has a lot of excuses. When they came into the earnings call, they said that, oh, it's because of the tech crackdown. So tech companies are pulling back. Oh, because of macro environment, that's why companies are pulling back. But then, of course, if you triangulate with the rest of the other cloud providers, so Baidu and Tencent, so Tencent quite sneakily, they removed the whole cloud segment. So you can't really gain visibility in terms of the growth rate of the cloud. So for Baidu, Baidu is the smallest out of the three, so they're still growing decently. But I think the bigger issue that I did read somewhere just recently. I haven't released a video yet, so this is first-hand information on Josh's channel. I'll release a separate video soon. But it seems like there's this China Mobile Network. I forgot what was the name. It's essentially a public cloud. It's a state-owned enterprise, and the cloud business is growing exponentially. So it's actually expected to take over Ali Cloud as the biggest player by end of this year or start of next year. This state-owned enterprise here is the one that essentially, I think the concern really is around the public cloud versus private cloud. So in terms of private enterprises, I think people are still reliant on all the tech companies because tech companies offer different product offerings and stuff. But for government services and the government contracts, I think most of them rely on all the state-owned enterprises. So which is why with that new transition or that new shift, right, growth rates started coming down quite substantially.
How nobody noticed this government cloud all these years? It couldn't have sprouted out last year, right? It's been for a few years already.
Actually, I think it was during the tech crackdown that really escalated or accelerated this whole transition. So it's most probably, right, this whole cloud thing, I think, if I'm not wrong, the government issued kind of like a warning. Not warning, they just told public companies or not public companies, state-owned companies to kind of shift over to state-owned cloud services so that they kind of draw a very distinct line between state-owned and the private sector. So in terms of the private sector-wise, most of these tech companies got hit quite badly, mostly are tech companies in the crackdown. When all these factors agglomerated together, that's why growth rates essentially came down. But I mean, in terms of expectations, street consensus wise, many people are kind of expecting it to recover, but not recover back to like 50-60% growth rates in the previous time, like I think 2-3 years back. So the normalizing might come also, but it might normalize back closer to 20-30% instead.
Well, because if I look at profitability, we'll see that China Commerce is profitable. In fact, it's probably the only one that's profitable. Correct me if I'm wrong. Then the rest of the segments are loss-making. Cloud is marginally profitable on EBITDA, but if we factor real profits, it will also be loss-making. Then how are we going to list them? If I were to guess, cloud will be the one that's listed first. It's the biggest in size, closest to profitability, but nothing looks, super attractive also from the listing perspective.
I think, from listing perspective, I think there are two main segments here. I think Ant Group, let's not forget that there's still one that is floating around. So Ant and Cloud is probably the two most exciting IPO out there. So I actually do share similar thoughts. So similarly, I think I kind of write off the digital media space because I think, or the digital entertainment arm, because it's, I usually just write it off because I don't see any value in it. In fact, it's like, I mean, people can say that
it's on CCP's moral value thing, right?
So,
that's a dangerous segment.
So, I mean, even CCP has a golden share position in the media arm. So they have a 1% stake, but they can veto anything. In terms of from an IPO perspective, like from a capitalistic perspective, yes, it's true that some of these businesses like Cainiao, local services might not be as exciting as the rest. But I think the bigger issue is the elephant in the room is many people are saying just the commerce business alone is probably worth more than Alibaba's valuation then at sub $80. So when you break them up, you allow for the companies to individually be valued. So for example, like the commerce business and the cloud business and Ant Group, then you know that the combined value is definitely more than the current value, which is why there's this push up in price. But would you argue that whether Cainiao, whether the international commerce is negative value? I also don't think so that they are negative value. They might be marginal value, but when you break them up, it just allows for the market to price them more effectively. That's generally what it means. I will presume that they wouldn't just want to IPO for the sake of IPOing. If there is no value or if the IPO market is not hot, there is no excitement around it, then there's no point, right? Because if you IPO, you are issuing out shares. So for example, like I currently own 100% of Cainiao. If I IPO out, I probably need to release a float. So maybe I release like 40% or 30%. And the cash I get, if it's not going to be high, then it's not accretive to shareholder. So that's the entire logic.
And Alibaba has cash, right? I remember seeing big cash balances. That's why they've been investing and diversifying so broadly. They don't really need that cash. Unlike some conglomerates who need cash infusion. That's why they sell one of the crown jewels away. into public markets.
It feels very much like this whole idea of breaking up the business is really to kind of air quotes unlock shareholder value, not really to raise capital or whatever. Because they have a crazy load of cash on their balance sheet. They are not going bankrupt anytime soon, and they're highly profitable as well.
Then we should draw the discussion to Tencent also, because Tencent, in my understanding, is even broader. They pour money everywhere. They are like a venture fund, equivalent to Temasek even.
Right.
Seeing how their share price has compared against Alibaba's, is there rumors that they could also follow a similar suit to breaking up?
What do you mean in terms of breaking up?
Yes, breaking up and separately listing all the individual arms, entertainment be one, so that if it needs deeper oversight and a golden 1%, it can also be administered.
Right. I think they do have. So there is arrangement. Like they already have the golden 1%. So I think in terms of all media companies in China today, CCP probably have a golden share 1% in most of the big ones out there. So from Tencent's perspective, that's an interesting one. Because for now, if Tencent were to really break up or announce the breakup anytime soon, then it's probably quite obvious that it's the CCP that orchestrated and not really Jack Ma. So from that perspective. But if there is no recent news of breaking up, then maybe it was really a strategic or business direction. So then circling back to Tencent, right? Tencent's business, I think, is slightly more complicated than Alibaba, because like you said, they have this venture business. So listing a venture business is probably like listing Berkshire. I don't know how they're going to do it, but yeah, that's one part of a big part of their portfolio. Then they have their gaming business, they have their messaging business, they have their fintech business, they have their cloud business, and all this stuff. So I think in terms of the breakdown of revenue profitability wise, Tencent hasn't been as transparent or as straightforward as Alibaba. They can move things around. So sometimes, like I said, right, last time cloud was out and then now cloud goes in again, because there really isn't very strong regulation in terms of how they're supposed to do their reporting. But that's how they display their financial statement based on management's discretion. So from that perspective, it feels to me like they're not really heading into that direction. But of course, I can be wrong. But from Alibaba's case, you can see that it's quite obvious that they keep giving granular breakdown, and then it's over the years thing. So the last 2 years, when you monitor their FS, their financial statement, they keep trying to do a breakdown, and then when they break down even more, and then they try to give even more transparency from the revenue breakdown perspective as well.
Because Tencent is the only one that has held on to the reopening gains in January. Everyone else in China, big tech, including JD.com, has actually came down in share price. So I'm still curious, like what are some reasons?
Actually, it depends on the time frame that you looked at. Screenshot, right? It was a 1 year time frame, right? So actually, this whole reopening boom only came in at around November, December. Yeah, I mean the announcement was in it started picking up in January. So if you start doing a year-to-date comparison, right? I think for Tencent and Alibaba, they still kind of managed to hold the gains. Tencent is still up, definitely. So Tencent is up like 18% year-to-date. Alibaba is around 11%. JD is down 24%. But for JD's perspective, I think it was a company-specific issue. They missed bottom line estimates, and then growth rates are significantly slowing down. So when you look at their, I think growth rates-wise for the last 3 quarters, it was like sub 10%, sub 5%. So market is essentially just punishing it's a company-specific event. So then you see that delta, right? So Alibaba is up 11, JD is down 24. So that 30% delta is a bit weird. So that's not very telling of the entire story. But I think the reopening boom-wise, largely speaking, I think for both Ali and Tencent, it's still kind of there. Like they didn't. Tencent is definitely performing better, but Alibaba kind of gave up the gains when they pushed up to 120 and then it came down again. Because this whole reopening story is starting to not be as exciting as how investors anticipated. I think that's the long story short.
I've been playing this reopening story via Singapore stocks in the travel sector, because I imagine Chinese tourists will be coming in big flows.
Right. I would presume so as well, but I don't have additional capital to allocate, sadly.
Or rather, have you turned a more optimistic view on overall Chinese tech because of reopening? Or you think it really doesn't matter that much? Because the main business is in China.
Right. Truth be told, I think this whole reopening story, particularly so in China, there is a lot of narrative building. So I would prefer to look at the numbers in terms of like company earnings, GDP report, CPI and stuff like that. Like you try to triangulate data points yourself. I'm not saying very optimistic, I'm not saying very pessimistic, but I do see it as definitely a catalyst, and it's one of the catalysts for me to even buy in the first place, because I know that this whole COVID lockdown thing is a transitory thing. It's not going to be perpetual. Sooner or later, companies have to start doing business again. Sooner or later, people start to transition to cloud again. And GDP is a huge, it's a great report card factor in the CCP's eyes and in the CCP's book. So when I put all these together, I'll just wait for the numbers to come along, and I'll see whether things are going to play as expected or as anticipated.
I think a good place to look at numbers that are looking different is something I wanted to quiz you about, which is Charlie Munger's quote that Baba was a mistake, but then BYD was like the good son that he has. Then BYD's numbers seem to be very good. Would you be looking at Chinese ideas other than in Chinese tech?
I do believe that there are opportunities everywhere. The biggest issue with the Chinese example, right? If you want to invest in Chinese stocks, I tend to probably look at only the big caps. So even your Moutai, your Li Ning and stuff. I tend to stay away from smaller caps because it's a little bit shady. Sometimes I honestly don't know what's going on. And unless you can fly over there and you can, even after meeting the whole management team, you might be hoaxed or you might be scammed in a way. So from that part, I think the biggest way that investors can protect themselves is to just stay in large cap stocks. So then in large cap, there are different sectors, right? I don't know, beverages, essentials, your tech companies and stuff like that. So I actually do look into like different sectors. I think I was studying like a milk company of some time back, but largely speaking, it's because of the valuations that have been stopping me. Because for people that think that China stocks are always cheap, right? Please take a look at mainland stocks. Some of them are trading at PE of 30, 40 times. It's not cheap. Some are even more expensive than your US stocks. So it's this idea or this misconception that all Chinese stocks are cheap or nobody's investing in Chinese stocks. I think that's quite dangerous. I think to circle back to your question, yes, I do take a look. I'm technically agnostic to industries. I just like companies that I can kind of understand better, and probably there's a margin of safety and all your different checklists when you look through a particular potential investment. So that I hope that answers.
That gravitation towards US stocks would definitely apply, right? If you're not looking specifically for
right. Yes, I do place a pretty, or at least I have overweightage in terms of looking at valuations. So it just happens to be that, hey, China stocks are cheaper, or Chinese tech stocks, mega cap, are cheaper than US stocks. That's why I rotated over. So now actually incremental money that comes in or incremental cash flows to my portfolio, I'm actually adding to some of the US names as well. I'm not like, I'm pro-China to support CCP or stuff like that. It doesn't work that way. So as long as there's opportunity, I'll sink my capital in if I think there is potential for it to recover.
Well, to this point, I can also share with audiences listening in some bonus updates. I've been buying into funds broad-based into Asia. So Tencent is just one of the holdings there. I'm not too specific in China. I'm moving forward, but I'm more focused on the amounts going in. How to buy broad-based Asia, and naturally you see TSMC also there. Oh, and speaking about TSMC, any interesting points to round things up? Because Buffett bought in and sold out, and I think you have a TSMC stake, right? So you have some interest.
Yeah, I do. Okay, so TSMC is it can be a whole full-blown video on its own. But I think long story short, right? I think somebody quizzed Munger on the TSMC position as well, on why Berkshire actually they're essentially day trading, right? Or the one quarter they go in, the next quarter they come out. From that perspective, I think TSMC is an incredible business. But I think the business economics was the one that kind of stumped Buffett and Munger, because they want a business that doesn't really need a lot of capex. They have brand equity, and then they just keep generating cash flow in the foreseeable future, and then they just sit down there and then just collect money. So that's the logic. But I think for TSMC's case, I don't really necessarily think that they are worried about geopolitics or whatever. Those are just narrative building again. But they are really just worried of the crazy amount of capex and the nature of the industry for them to keep staying at the top of their game. So that's my general take on this business. But it's still an incredible business. I don't see anyone coming close to them. I mean, it's a duopoly. Samsung and TSMC will just fight each other. But I do have concerns when they start expanding into like, or the US government or which government gonna strong arm them. They're gonna start building capacities in the US, and then costs start going up, because we know that. I mean it's a known fact that costs are going to go up. The work ethics of different populations or community might be different, and then stuff like that. So this might hit the bottom line because it will be translated to additional expenses. But then again, if you are going to buy almost monopolistic business, I think there is still pretty interesting opportunities out there. But I kind of just limit exposure for TSMC specifically.
I think for anyone listening in TSMC, Taiwan Semiconductor, yes, there are a lot of news that they have to build plants in US, right? Big amounts to pour in terms of capex there. I'm surprised also that Buffett has flipped his narrative so conveniently.
I think for Buffett's case, don't read too much. I think don't read too much in terms of the sale wise, because I think that there's this quote, right, for particularly so in the value investing community, there is 101 reasons for people to sell a stock, but there's probably only one reason why they started. And for a long time, Lao Jiaos, right, like Buffett and Munger, they probably did their homework, like extensive homework before buying in. But then the sale wise, not too sure. Everybody speculate. Maybe you can look forward to the answer in the next Berkshire meeting. I think it's coming soon in 2023. Somebody's probably going to ask them about the TSMC position. But then whether they want to answer
more ready to share a bit with some time lag factor in.
Yeah.
You know, I'm also on board with this China space also. I haven't sold out on my positions, buying the broad-based China. So
are you still dollar cost averaging?
Are you still completed already? I haven't added new monies. So my new monies are going towards broad-based Asia, which includes India. So you'll see Taiwan, you'll see China, in Hong Kong, and India. So I'm not picking specific regions really. The previous dollar cost average was towards China specifically.
China,
so that's, yeah, that's built up quite big already. So I'm also hoping for a full recovery in that sense. So we are on board together. So anyone listening in, leave your comments and thoughts in the comment sections below and smash the like button as always. Thank you, Chi Keng, for this discussion, this update. I think it's very valuable for the community.
Thanks, Josh, for having me. Hope you guys enjoyed the discussion and yeah, smash that cute little like button.